Hi everybody, how is it going today? So, hey guys, we're going to take a look at basic risk management, okay? Don't be naughty with your money and let the risk be risque. Without good management, all you'll cause are the damages. Wondering in bafflement, where'd my money go? Why is it sitting on the battlefront? You'll deposit more, where did it all go again? I call that abandonment. Now, I gotta be very adamant, give you guys a bit of encouragement. You want to play conservative, don't ever play extravagant, otherwise you'll learn quickly about the word famishment. If you're going to play risky, think first and exercise abstinence, or else you'll be in lots of pain. Somebody call the ambulance. Now that you guys have a very clear stance on risk management and how I feel about it, you guys know very well that I think that if you guys don't mismanage your risk really well, you guys are going to lose all your money. And you guys don't want to do that. And it's a very basic principle that I think everybody should learn. And if you don't know about risk management already, and you've only been trading for a very short period of time, what I can guarantee with 100% certainty is that you will lose all of your money eventually over time. Because if you don't know how to control your money and manage it properly, then how the heck can you retain that money as well, right? Your streak of luck will run out inevitably, guys. If you guys have been only trading for a few short months and you guys have been winning a little bit, I assure you that the luck will run out, okay? It will absolutely run out if you don't have any risk management plan. So what I would like to talk about today is a very basic risk management plan and a slight way to ladder your buys so you can average out prices. So let's first of all talk about what risk management is, okay? Risk management is a way of managing your money where you will factor in your possible gains versus your possible losses. So you can make a decision on if this is a good possible reward setup or not. And if you guys have noticed from the trades that I do call with risk to reward setups, well, you're getting a risk to reward setup of, anywhere between 2 to 9, right? So I'm taking very, very low risk, high reward setups that I recommend to you guys. And now the lower the risk to reward number, the riskier it is. What you would want is a really high risk to reward number. So let's go over some basic examples that I've written out for you guys already. Okay, so let's just say you're going to the casino every day, which I don't recommend, okay? Stock market's a lot better. If you guys want to gamble, stick to the stock market, okay? It's pretty addictive, I have to admit. I think I'm pretty addicted to gambling in general, and I have a pretty bad addiction to the stock market, especially cryptocurrency. I tried to take a break a few days ago, and wow, like I was ready to hurt Luna. I was really ready to hurt Luna. I was like, Luna, somebody give me a stock market right now. I need to trade something. And she's like, no, Philcon, you gotta stop trading. And I was like, Luna, just a little bit. Just give me a little bit and I'll be happy. Just let me make one trade. Just $1,000. And she's like, no, Philcon, you said you weren't going to trade or post any charts for a week. And I got so upset, guys. I pushed her out of the way, and I started posting and tweeting again. So what I'm getting to is like, it's quite an addiction trading, but it's okay. We can manage our addictions. We can manage our problems if we have a gambling problem. Not to say that it's not, a major issue, but what I'm trying to make clear is that we are gambling. Okay, guys, this whole little soliloquy, what I'm trying to say is that gambling and going to the casino or playing the stock market, it is all gambling, no matter what anybody says, okay? But the thing about the stock market is, yes, it's addictive, yes, it's a form of gambling, but we can manage our risk a lot better than going to the casino where the probabilities are stacked against us, right? At the casino, and trust me, guys, I know I studied this a lot in classes in university for my math major. The odds are very stacked against you at the casino, especially if you're playing the slot machine, right? But I'm going to use a casino example because it makes the most sense, right? And the thing about trading is that we try to find really good risk to reward setups, and we try to find them because it gives us a chance to control the amount of money that we can win or lose, okay, guys? So that is what we're going to do today. So make sure you guys take it with a grain of salt, and also always formulate your own opinions and look for information from various sources, right? The more we look, the more we search, the more we learn, the more we grow. So, okay, guys, let's talk about going to the casino every day. So every day you go to the casino, you have a chance to win $150 and you have a chance to lose $100 for that day only. Now think of it as a trade as well, right? Think of one day at the casino as one trade, we can say. So you have a chance to win $150 and you have a chance to lose $100. As soon as you lose $100, you call it quits and you go home. And that is it. You don't play more than that. This would be called a risk to reward ratio of 1.5 to 1, also known as 1.5, okay? Because we can win 1.5 times more than we can lose. We get this number by dividing the maximum amount we can win by the maximum amount we can lose. So that's $150 divided by $100 is equal to 1.5, right? Which means we can win 1.5 times more than we can lose. So we call this 1.5 to 1. This is called 2, okay? Like, TO, 1.5 to 1, risk to reward ratio. It's commonly written as R:R, known as risk to reward. And you will also see it often written like 1.5 to 1, comma, R to R, right? 1.5 to 1 RR. So that's how it's defined in terms of how it's written and how people talk about it. So whenever you guys see me tweet about 1.5 to 1 RR, etc., you can definitely count on it like this, okay? So it's the ratio of what you can win divided by the ratio of what you can lose. Next part, I don't believe in PowerPoints, I believe in charts. So let's say we go to the casino every day with a risk to reward of 1.5 to 1. It can apply to any ratio. So in my example, if you can win 150, then you can lose 100. In another example, if you can win 1,500, then you can lose $1,000, which all means the same thing. Risk to reward of 1.5 to 1, okay? So each day we can win $150 or you can lose $100. And we ask ourselves, is it worth it going to the casino if we can win this exact amount every day, or we can lose this exact amount as well every day? So let's think about it. Each day we can win 150, and also each day we can lose $100. Let's just assume a 50% chance, okay? But the thing about trading is that it can be much higher than 50-50, right? In terms of how you can win, because we've got technical indicators. When we factor in technical indicators, when we factor in just overall indicators and candles and just strategy and patterns, etc., it's going to be much higher than 50% depending on your skill level. But I'm just using a 50-50, assuming that there's a split even chance, all right? So we take this scenario here. Let's go to the casino now for 10 days. Let's go to the casino for 10 days in a row. And out of 10 days, with a risk to reward of 1.5 to 1, and you win 50% of the time, and you lost 50% of the time. Each win is $150, and each loss is $100. And we'll just alternate the days, okay? We'll alternate the days. So day 1, we win 150. Day 2, we lose 150. Day 3, we win 150. Day 4, we lose 100. Or sorry, day 1, 150. Day 2, we lose 100. Day 3, we win 150. Day 4, we lose 100. Day 5, we win 150. Day 6, we lose 100. Day 7, we win 150. Day 8, we lose 100. Day 9, we win 150. And day 10, we lose 100. Now that's 50-50, okay? Just 50-50. Make sense so far? So win days are 1, 3, 5, 7, and 9, obviously, because 50-50, which is 5 win days. So loss days would be equal to day 2, 4, 6, 8, and 10, which is also 5 loss days, right? So now that's down 5 out of 5, 5 wins, 5 losses. Well, 5 wins at $150 each is $750. But 5 losses at $100 is equal to $500. So your total profit is equal to $750 minus $500, which is equal to a profit at the end of the 10 days of $250, right? So if you keep taking a risk to reward setup that's fairly high, over time, you will win no matter what, guys. And that is why I always try to tell people that the one trade does not matter if you lose. On that one day, let's say days 2, 4, 6, and 8, you lose, and 10, 50-50, it doesn't make up for the days that you won in terms of losses, okay? The days that you have won, they will entirely make up for the days that you have lost. So as a trader who does this full time, what I focus on is making sure I win over time. And I don't care at all about the one loss, for example, like the NEO one, right? Well, it wasn't even a loss. I just joined in with you guys at $37 because I knew that you guys were also in the long position from $37. I knew it wasn't probably going to hit it, so I cut my losses. I cut 63.30 and I took like $150 loss, right? Just to show you guys an example that was leading up to today. And it's also to show by leading by example, right? That yeah, I took a small loss. Honestly, it was a small loss on purpose that I took. I knew it wasn't going to hit back to it, but later today it hit back to it, right? But it hit my stop loss. It hit my stop loss, so or it hit a plateau that I thought it wouldn't break. So I took a loss, guys. And when I think of the loss, does it make up for this amount that I lose, 100, 150? Is it really significant when I compare it to all of the trades that you guys have seen me tweet about? In fact, we're talking about ETP today, right, guys? ETP has gone up by 20%, guys, or 17% in less than 24 hours from when I tweeted it. So sure, people might have lost a little bit on NEO, but you guys look at all the wins over time. Not just mine, but you look at yours, right? And that's what you should focus on. You should not focus your energy or your emotions on one small losing trade, because if you keep that mentality up, it's not going to make you a successful trader. A successful trader will always win over time by managing their risk, okay? So, what is this right here? Okay, I'll be right back. I gotta get my new screen up. All right, now that we have the basics established, what I want to go over, let me just have a sip of water here. Okay. So now that I have the basic risk to reward definition up, we want to know what this is. I always see this, but what is it? And that is what I would love to go over. I also want to check ETP, guys. I called this yesterday. I suggested an entry price under 325. Under 325. So right around here. Say right around here. And it has gone up by 18%, guys. Because I always take the trades that I share with you guys. 100% I take a trade. But I don't take the trade before I make the video. Because I've got some pretty strong ethics, you can say, and I have some strong values in terms of fair play in the market. And I know for a fact that the price is going to go up. That's why I'm making the video. But at the same time, I refuse to buy before I make the video because I also want everybody to get in on the same chance. So when I post the video, that is when I will start accumulating just for fair play. And these spikes that you guys see are most likely because of me, because I make the video and I will buy and I will accumulate and I will slowly drive up the price myself just to give people watching the charts there. So this little green spike candle right here around 3 in the morning, guys, that's me. I wanted to. So if it's a low market cap coin, or not a low market cap, but a low 24-hour volume coin, I will give the market a signal sometimes if I'm entering a large position. And these signals right here come in the form of a candle, just to let people know that something is going on. So yeah, so what I'm saying is I will absolutely buy the coin myself, but only after the video is released. So it's just to make sure it's fair play for everybody, right? I don't want to be the one with all the information and then I just hog it to myself, right? That's why I share these charts with you guys as well. So let's see why I always have this, right? This green, red thing, right? I got it everywhere. I got it in every single one, right? It talks about the percentage to gain. it talks about right here as well, the risk to reward ratio, and it talks about the percentage right here. So if you guys look, right, this is your percentage to gain, this is your risk to reward ratio, and this one right here is your profit loss percentage, right? You see in every single one of my chart of mine, and I also write all of these details as well: the risk to reward, the entry price, the target price, chance to gain, probability, and stop loss. We're going to talk about how risk to reward is calculated, okay? So we're going to take a look at some stuff here. I'm just going to write it down. So what you guys notice here, it says the risk to reward is 1.5, right? The entry price is right here, profit level ticks. Sorry, that's your target price right there. 3.6, you can see it here, 3.67. If you double click on here, you can also see it here, 3.607. This is your entry price, and this is your stop loss, okay? And that all those numbers I also wrote here as well. So what this means is in the middle line, right here, where the red and the green meet, that right there is your price that you will enter a position, okay? And that price right there happened to be 3.5. Now the top part is where your target is. That is the part where you are targeting based on doing your tactical analysis where you think it will reach, okay? So everything that is in the green zone, let's say I moved it over here, okay? See, you guys notice right here that the green gets highlighted, right? It gets highlighted extra. Everything in the green zone, like if I go from here, for example, you guys will notice, look really closely. You notice the shade of green change color, right? For example, right there. Everything there is your profit. That is the profit ticker. I'm going to change this back to 3.5. So yeah, let's go right here. As an example, 3.5. This is down ticking pretty hard right now. So how is this calculated, your risk to reward? The risk reward is calculated by taking your target price minus your entry price divided by your entry price minus your stop loss price, okay? So this is a formula right there. You're welcome to read it again. So the target price is right here, $3.67. Put into there, minus your entry price of $3.50, all of it divided by the difference between your entry price and your stop loss price. So what we're going to take is the top line, 3.67 minus 3.5, divided by the bottom line, 3.5 minus 3.38638, and we get this number here. We get the 17066 divided by 0.11362, which is equal to 1.5 exactly. And this right here is known as 1.5 to 1 risk to reward ratio. That is how this is calculated, guys. So what this basically means, and if you guys think back of the casino example, is that every time if you enter this trade right there, this trade right here, okay? If you enter this trade right here, and you use that casino example of 1.5, what this means is you have a chance to gain 4.88% of your money every single time. And you also have a chance to lose 3.25% of your money. So what this basically means is if you take your possible loss percentage, 3.25%, you have a chance to gain 1.5 times more, which means you will win up to 4.88% of the time, okay? Now, we're going to do that basic math again just for you guys to know, right? And we also did that 10-day ratio again. So 10-day ratio, let's say you had a chance, let's just say we're going to use exact numbers so you guys know. And I'm going to do the math right here in front of you. Okay, let's say out of 10 trades now, 10 trades with this exact same ratio, with the exact same chance to win, with exact same RR, with same position size of say $1,000, right? Actually, we'll use a round number, 320 position size of $1,000. Sure, $1,000. Okay. And now what else? So which means that if you have a chance to win 4.8% equals to $448. Okay, $48.8 per win. Chance to lose 3.25% is equal to $32.50 per loss. Right? You guys following so far? We're using a $1,000 position size. Okay, $1,000 position size, and we are taking this specific chance to gain scenario. So if you entered a position right there, for example, that's what it would signify. Now, out of 10 games, or 10 trades rather, right, 10 trades, we're assuming a 50-50 chance as well. And also always keep in mind that it's usually higher than 50% chance when you enter a trade, because you look for indicators, and you make sure that you time it very precisely when you enter, right? And once you get something called confluence from more indicators, then you will have a better gauge of how possibly successful it can be. And I have a lot of different spreadsheets, guys. I have so many different spreadsheets that I keep, and I'm going to share with you guys one of my favorite spreadsheets today, okay? It's basically a risk to reward calculator, and it'll also allow you to gauge how much profit you can make just by putting in a few simple numbers. So with this exact one right here, right? I'm going to do it mathematically first by text, and then I'm going to show you on a spreadsheet. So out of 10 trades, win 5 win, 5 losses, okay? So if you won 5, win 5 at 48.8 each, that's equal to, each is equal to, I gotta get my calculator, I can't do that in my head. Asian level mathematics has officially failed. Somebody pull the Chinese gentleman from my pocket. 200, oh crap, he's not here. He's too busy playing the piano. Win, so now you would lose 5 at 332.5 per loss, right? Each per loss. Now that is equal to 32.5 times 5. That's equal to $162.50. 62.50, right? Is that right? Yes, 162.5, right? So that's a total wins, or total profit from wins And this one here is your total profit from losses. Okay, following? I hope so. And now what is your actual total profit? Actual total profit is equal to 244 minus 162.5 is equal to, I can't do the math in my head. Asian level mathematics has failed officially again. Impossible. How does Finnegan fail? It's so impossible. It's now equal to 81.5. 81.5. Okay, so if you guys took this risk to reward setup every single time, and I've also related it to many different, to the casino example as well, well, would you guys agree with me that if you were playing $1,000 every single time, if you had a chance to win 4.88%, so it says right here 4.88%, and you have a chance to lose 4.25% there, your risk to reward ratio is 1.5, okay, 1.5, we've all defined it already. Would you guys agree with me that out of 10 trades, same position size, same chance to win, if you won $48.50 each, for a total of $244 profit from wins, and you lost 5 each at $32.5 each per loss, which equals 162.5 total profit from losses, wouldn't you guys agree that the total profit is equal to $244 minus 162.5, which is equal to an actual profit of $81? Yeah, of course you would agree with me. And that's how I trade over time, guys. I will trade over time, and I will make 100% sure that I always do my risk to reward calculations, and they have to be on point. So there you guys have it. That is how you do the calculations, right? So I apologize. I know a lot of you guys know this math is really easy. This is not advanced mathematics, guys. This is honestly like high school mathematics, right? You just gotta put a little bit of time to learn just the basic math. You know, I studied math at university for 3 years, right? And trust me, this is really easy math, and it might be really foreign to a lot of people, but trust me, when you guys work with these formulas long enough, they'll become really easy. In fact, when I first started learning about risk to reward, I didn't really understand the concept as well either of winning over time. Not to say that some of you guys don't understand it, but just for the people that don't, okay? I didn't really understand it as well, right? Depending on how good or bad you are at math. But I firmly believe that it's something that we should all learn over time because it's what keeps us profitable. Now, entering a trade, guys, and hoping never works. As I always say, the best way to be successful as a trader is to constantly know your risk to reward formulas. Not your formulas, but your risk to reward ratio. And that is what keeps you profitable over time. Because I always mention, we don't care about the small losses, guys. We just want to make sure we stay profitable over time. So myself, when I take a loss, I just say to myself, meh, whatever, it's just another loss. And I look back to my massive spreadsheets and I'm like, I just won the past 13 trades. I really don't feel that bad anymore. Okay, so this is priming for a breakout right now. It's just itching for a breakout right now. What I love about ETP is because I have a 0% fee, right? Because my maker fee is 0% based on my volume. You have to do quite a bit of volume to get to that. Because it's 0%, I can scalp literally 1 cent, guys. I can scalp 2 cents even, right? Normally you can't really do stuff like that, but when you get your volume high, like it's quite amazing. So I can scalp, for example, IOTA, you know, I can scalp Ripple as well, which is kind of this is why I don't recommend people scalp, because you guys might not have the same maker and taker fee, right? So you got to play with a different spread. So if you guys see me tweet about scalping, you know, take it with a grain of salt and always take into consideration your actual your actual maker and taker fee as well. So now I'm going to show you guys. This is going to be a long video, guys. This is going to be a really amazing video. It really is. I'm going to share with you guys. I'm going to share with you guys something here, okay? All right, so take a look at this. I'm going to explain to you guys my setup for here, okay? So I also factored it into the maximum maker and taker fee, just so you guys know. Let's say you guys bought ETP coin, right? You bought ETP right here at $3. I'm going to go through every single field, don't worry, at $3.50. Well, if you went to, I always have up or down, just so I can see it on both, up or down. What it means is if you went long and you factored in the maximum maker fee, or taker fee, which is 0.2 times 2, you have to sell it at basically 0.4% more, right? So to break even, based on all fees, you would have to sell it at $3, 3.514. And if you short it, it goes to the opposite, right? I just like to have it up and down for both. So these are the same, excuse me, I burped there. This was the same thing. 3.5, you need to sell at 3.514 to break even. Now this field here is how many coins you're trading. So let's say you're trading, I don't know, 1,000 coins, okay? 1,000 coins right there. You put in your purchase price, your up and your down field, you do not touch that, okay? Now you put in your resistance, your maximum resistance, right? Where your resistance is basically the maximum point where you think it'll reach, okay? Which is basically the top of this, the top of the green box right there, okay? So our target was $3.67.066. So I will put $3.67.066 in my resistance, okay? See that? And then my target sell is, we'll say something slightly lower than it, say 365, right? Because, you know, that's just a target. It's not 100% likely to get there. We might want to shoot for something slightly lower. And then now what we put in is our stop loss, okay? And our stop loss is 3.38638 right here, okay? So if you guys notice, the risk to reward popped up right away. If I increase my resistance to 7.5, then my risk also my risk to reward ratio is higher. If my target was lower, 3.64, then, or sorry, 3.55, well, now my risk to reward is really low at 0.4. You don't want to do that, guys. You always want to take risk to reward setups of at least 1 and up. My scalping risk to reward positions that I take, they're very risky. They have lower than 1 risk, okay? 1 risk to reward ratio. That's why I don't really share them in terms of having a green box like this on Twitter. It's also instantaneous, the decisions that I actually make. So check this out here. We're just about to close higher than here. You guys see that? We ticked up 3 cents already. Do you guys see? So that's what I was talking about, guys. And now I'm going to short it when it finishes this correction. Remember, earlier it was at 3.6 and I was just talking about wanting to take profit because I want to finish this video. But I know I can read indicators, guys, like you would not believe. Like, yeah, I find trading honestly nothing but a glorified video game. And it's not even trading. It's not even trading. You don't ever want to focus on the money, guys. Trust me, okay? You do not want to focus on learning to trade to make money. What you want to do is you want to focus on trading and learning these skills to develop them. You have to develop these skills, okay, guys? I mean, if people don't play in the NBA for the money, you know, it's because they love the sport, right? And they keep practicing, or in any sport. They keep practicing, and the money is a bonus, right? But the main goal, like, they don't go into practice, guys. Like, they don't scrimmage, right? They don't go to practice at the basketball court before games, etc. during the season, and with the idea of thinking, hey, I'm gonna go in there to make money. I'm gonna go to practice today because if I go to practice, I'm gonna make money. No, it doesn't work like that at all, guys. At all, okay? The money, they go there to refine their skills, and they understand in the back of their mind that the money is actually a bonus from everything going on. All right? So that's something that we have to firmly understand. That everything that we do is to improve our skills as a trader. It is not to make money. So I'm just going to take a look at this right here. Give me a second. Okay, so yeah, I forgot where we were. I was actually gone for about 15 minutes there. I just got some company over. Yeah, so this stop loss right here, we'll just get back to where we were. I'll try to remember 3.67066. Right, so now we got the exact same thing in this spreadsheet that it shows. If we take a look at here, for example, this right here, and I'll just put in, once again, I'm going to go over it to make sure you guys understand it very thoroughly. Put in the amount of coins that you bought and the purchase price here, just like this example we've been using the whole time. Entry price of 350, right? Entry price of 350. Your target sell price, or first I'll put in your resistance, where there's major resistance, right? Up there where you think the maximum target it'll reach will be around there. So this was 3.67. Whoops. Sorry, my numlock wasn't on there. You guys are going to get a lot of goodies today from me, like tons of amazing goodies. So 0.367 there. And your stop loss, that is the point where you guys are going to say, no more today. No more. I'm going to cut this loss every single time at this price pretty much, okay? It's called, I want to get into stop losses in a different video. So I'm not going to get into it too much in this video. Stop loss is a fairly important topic as well. But to me, I don't have a hard stop number. A hard stop would basically be this. A hard stop is defined as something, if it hits this target, I will sell it no matter what. That is not me, guys. I don't do that. And I'm going to get to it. This is going to be a really long video because you guys are going to get a lot of goodies from it, okay? So this refers to your position size, okay? If you bought 1,000 coins at 3.5, the yellow field is the only thing you guys touch. That's why it's highlighted, the yellow. You don't touch any other field, okay? Coin, your resistance, your stop loss, your target sell, your purchase price. Your up or your down, you don't touch. This tells you what is your position size. It just takes your coin amount multiplied by your purchase price, okay? That's it. Your risk to reward is 1.5, all right? It's 1.5 there. And sorry, this is the maximum you can lose. So if you take your stop loss there, right, and this calculates it all, right, this is the maximum that you can lose, which is also says right there, 3.25. But the reason why this is 3.65 and this is 3.25, notice the difference of 0.4 is because this factors into account the maker fee of the maximum amount, which is 0.4. Okay, guys? That is why. So I'm taking 3.25 and I'm adding 0.4 to it as well, because we have to factor in fees, all right? The fees is really important. And the target growth, right here, you guys, the target growth, this is what you would gain in percentage if you sold it at that price. And your maximum growth is how much you would actually make. Am I calculating this right? Sorry, the maximum growth is the maximum you would win in percentage. Notice this is 4.88, but this one is 0.4 less, okay? This is 4.88 minus 0.4 because there's a 0.2% for the maker fee, right? Or sorry, for the taker fee each way. So I'm factoring the maximum percentage for you guys in here, all right? So that's really important. So this one, once again, is your maximum loss, which accounts into fees. This one here is your target growth, which also counts to your fees for the target sell price that you were specifying. So let's just give an example. If you're curious, hey, if I sold at $4, what would I make? I would actually make 14% of my money. I would make $486, okay? And this one here is your maximum growth based on the resistance. This tells you your maximum loss amount. This tells you your maximum profit dollar, your maximum profit right here. Sorry, your maximum profit if you sold it at this price. This column right here tells you your maximum loss if it actually hit your resistance, okay? Now this is a pretty basic spreadsheet. You know what? I'm actually not going to give this one away. I'm not going to post it for you guys. I'm not going to do all the grunt work for you guys. I take that back entirely, guys. I'm not going to share this spreadsheet because I think that everybody should put in some hard work as well, and you guys should probably develop your own spreadsheet as well. And this is a perfect example of how, you know, I don't know why I just had like an aha moment there, right? Usually I'm doing a lot of the work, which I'm more than happy to do, and I'm very, very happy to do it. But in terms of spreadsheets, I'm definitely going to keep these to myself. So I retract what I said about sharing it earlier there. Sorry, I just had to go AFK there for a second. And now what we're going to talk about is averaging out your prices, okay? Now that you guys did, oh, there's also a formula that I keep as well for my short right here. For my short, so not only do I have it for going long, but I also have the exact same formula. And I've been building this for years now, guys. I've been building this spreadsheet for like pretty much 2 years. Just this specific one, just to make sure it caters specifically to me. And the risk to reward is bang on, right? And mine is actually 0, so I would be removing the 0.004 in there. And now I want to talk about something called averaging out a price, and I want to give you guys one example only, okay? So let's just use right here as an example. We're going to clear everything on the screen, okay? Let's just say in these 5 minutes, you guys screwed up, okay? let's say you bought somewhere here, right there. We'll make it a round number, 3.20, because it bounced right here, and you guys thought, okay, it's gonna bounce, and we're gonna make sure you guys can see that here as well. 20, show the price. So that's $3.20. This line right here. Okay, you guys see that? There you go. That's $3.20 right here. 3.2. Now, you guys might be waiting a really long time. You might be waiting a really long time if you were going long for it to even get back to this price, right? And I know what a lot of you traders do. What you guys do is you guys will hold on to it for as long as you can until it bounces back. That is a typical mentality of 95% of all traders because stop losses are not learned yet or you guys aren't familiar with how to manage your risk. Now, I'm going to give you guys a very basic example of how to ladder your buys and what I would recommend to do as a simple and basic method of risk management and reducing your risk in general. Now, I'm no financial advisor, but this is what I would do, okay? Just as a very clear example. So if I thought that this was the bottom because it went high, okay? Right? It looks like it double bottomed there a little bit, but it went way lower if we notice, okay? So let's say we bought 1,000 coins here. We bought 1,000 coins, 1,000 coins at $3.20, which is equal to $3,200, right? Which is equal to $3,200. Now that right there, guys, is a mistake, right? So you're gonna have to be waiting a pretty long time. Some people might even panic, right? They might even panic. Actually, I'm not gonna use 3,200. I'm gonna use a better example so people can relate to it. I'm gonna use $320, okay? And 100 coins. So now you guys have spent $320, 100 coins at $3.20 each. You might be waiting a long time for it to get back to here. In fact, you might not even know if it's going to get back to there. So you're taking a major risk, okay, guys? Because you're taking that major risk, this is what I usually do. I will assume that's going to go a little bit lower, okay? And when it gets to the bottom there, right? When I see spikes in volume, I'll put limit orders up. And when I put my limit orders up, just for example, I put one right here, and my order actually gets filled because someone dumps to it. Now, what's this one at? We'll just make this 3075. Actually, we'll make it 310 just to make it easy right here. Actually, what we'll do is we'll make it 3075, okay? Yeah, 3075. And now, what we're going to do is we're going to buy more. We're going to buy more at $3 right there. So let's say I bought a little bit more, and I bought, say, 200 more coins, right? Let's say I bought 200 coins more at $3.075. What is that equal to? 600, I can't do the math in my head, 615? 615, not bad. Asian level mathematics does not ever fail. So it's 615, okay guys, right? So you bought 100 at 320, and now you bought another 200. You bought another 200 at 615. Well, let's do the basic math, okay? Let's do the basic math here. And these are calculations that I really recommend that everybody learn. You've now bought a total of 300 coins, right? You bought 100 coins at $3.20, and then you bought 200 coins at $3.075, right? Makes sense so far? I'm just basically writing what I wrote above. 615. So that's now 300 coins total at 320 plus 615. So that's basically 300 coins total at $935, right? That's how much you've spent. So now what we want to find out is this. What is the average price? What is the average price? The average price is equal to $935 divided by 300, right? And what does that work out to? Let's do the math. 935 divided by 300. So it's now 31167. Now the average price is equal to 31167, right? That's based on just the math that I did in front of you guys. 31167. Yep, 31167. It's rounded up. So now, instead of holding 120 coins where their base price is $3.20, now your base price is actually because you bought more on the bottom, it averages out your price to $3.11, right? We'll just round it up to 312 just to make it easy, right? So now, before you have to sell it at this line to break even, but now you only need to sell it because you think it's gonna. You're basically assuming that it's not going to go down much lower. Okay, this is a strong thing that I need to emphasize. You are assuming that it's not going to go down lower because in this particular situation, the RSI was already pretty low, right? And now you see it dip down really low. So the chances of it getting even lower, not likely at all, guys. Not likely at all that's going to go lower. So because it was already low and you made a mistake and you buy it at 3.2 and it went even lower, now you're going to assume, oh, the 5-minute RSI is way too low. It can't possibly go that much lower. So you're basically going to triple up on the amount of coins you have. You buy more with the underlying assumption that it's going to bounce, okay? And now you only need to sell it at $3.12 to break even, right? 3116, 311, we'll say 312, sure. Right? So now you only need to sell it right here on this baseline. Coordinates right here. 312, that's it, guys. So now you only need to sell it to 312 to break even. Before, you needed to sell it way out to there to break even, but you're taking advantage of the fact that it's very, very much so at the bottom already, right? So you add more. This is a more basic, I guess, risk management technique, but at the same time, it's also risky as well, right? There's always risk on top of your risk. But because the RSI is really low, to me, it reduces my risk in general, right? So before, guys, this is what you were looking at, okay? before, if you were in a long position, and let's say you were targeting up here, and your stop loss was like sort of ridiculous, right? Somewhere like really low. We'll just assume a 1-to-1 ratio like this, okay? 1-to-1 ratio there. It's gonna be a really long time, right? Really long time, and the risk here is 1, right? Let's keep this at the exact same right there. All of a sudden, we bought more lower. Okay, guys, we bought more lower, and our average price is actually 312 now. We target the same price up there. We keep our stop loss pretty much down there. Now, guys, your stop loss is right below those points. Your target's the same. Well, your risk to reward just changed from 1.0 to 2.98. Which is a better risk to reward to you guys, 1.0 or 2.98? Well, obviously 2.98, right? And that's what it does when you are laddering your buys like this on dips, right? It averages out your price when you get closer to the bottom. It reduces your risk as well. When I say reduces your risk, what I mean is it changes your risk to reward ratio from 1.0 to 2.98. And that's a very important concept to understand, okay? Where we get to average out our buys. And so if you guys enjoyed this video, you guys know what to do. Share it, like it, subscribe, follow me on YouTube.